being joined by the management team of NMB. I'd like to welcome Ruth Zaipuna from the CEO of NMB Bank Plc, Juma Kimori, the CFO of NMB Bank, Aziz Chacha, the treasurer of NMB Bank, and Innocent, who is Yonanzi, who is the investor relations. Welcome everyone, and I would like to hand over to NMB team to present the 2024 annual results.
Thank you very much, Professor Wasame. Good afternoon, everyone. Good afternoon, ladies and gentlemen. As I have been introduced, my name is Ruth Zaipuna, the Chief Executive Officer of NMB Bank Plc. I welcome you all to our 2024 investor call. And Professor Wasame, once again, thank you so much for organizing this call. I will, however, I think request that going forward, these calls are done immediately we publish our numbers. I think it has been almost a month since we published our Q4 2024 numbers. So I'm actually traveling. I'm currently on the other side of the world as I speak. The rest of the team, however, at our head office in Dar es Salaam. So Juma Kimori, our Chief Financial Officer, Aziz Chacha, our treasurer, and Nishad. Is Nishad also joining this call, Juma?
Yes, he's supposed to join. Let me just confirm if he's online already.
Okay, so I think Nishad, our acting Chief Credit Officer, is also joining us from upcountry, but Innocent Yonanzi, our Head of Investor Relations and Sustainability, is also at our head office and joining this call with Juma and Aziz. I will actually not be able to attend the whole session. As I said, I'm traveling. I have other engagements in here, but I thought to join the call and briefly provide you updates on just a few matters. I think first to give you an assurance that the bank is doing well. Thanks to the positive operating environment, thanks to our customers, thanks to our investors for trusting us, for trusting the bank, but also for giving us the business that we have been doing with you. So the team, and particularly Juma, Aziz, and Innocent Yonanzi, they will take you through the presentation. They will take you through the operating environment, through the performance of the bank as part of the presentation for Q4 2024 and the whole year 2024. The second thing that I wanted to update you is on our medium-term plan. And on the medium-term plan, I think just to also give you assurance that the execution of the 5 years medium-term plan, 2021 to 2025 medium-term plan, the execution is on track. The disciplined execution of our strategic initiatives is evident in the results that we have been posting every year. I think the past 4 years have been quite clear, very strong performance that has been demonstrated, and we believe that we will finalize this, the medium-term plan on a very strong note. I think having said that, I also wanted to update you now that the 2020-25 medium-term plan is coming to an end, we are actually on the final stages of completing the next 5 years medium-term plan to 2030. And this is going to be approved in the May 2025 board meeting, ready for execution in starting 2026. I think the third update that I wanted to provide you is on the changes in the board. There has been changes on the chairman of the bank since 29th of January 2025. As you may probably know already, the previous chairman, Dr. Edwin Muhede, was appointed Deputy Permanent Secretary, Minister of Livestock and Fisheries, and CPA David Nchimbi is now the chairman of NMB Bank PLC board. David Nchimbi, most of you know him, is an entrepreneur and a seasoned business executive with over 24 years of experience in strategic leadership, corporate governance, and risk management. David is actually currently the managing director for Pemando Associates, and this is a consulting firm that is specializing in socio-economic transformation and business turnaround strategies. Previously, David Nchimbi was the managing partner for Deloitte & Touche, but he also worked with PwC and Standard Chartered Bank. I think with this wealth of experience and knowledge, we are all confident that under his leadership at the board, the bank will continue to strengthen in terms of the organization's mission, but also continue to drive success to our investors and our shareholders, but also the communities. I think the other update that I wanted to provide before I sign off, I just wanted to update on two other important topics that have actually been part of discussions in most calls in the past. And the first one is share split. On the share split, I think what I can say is that share split is an important agenda for the bank. And we all understand that this is a very critical decision to be considered. And hence the matter is actually being presented to the board for decision and way forward. What I can say now is that we will expedite looking into this matter and execute the right decision as guided by analysis, as guided by the board, but also considering investors and regulatory sentiments. And I think underlying the word right decision. Yeah, the right decision will be taken, guided by analysis, guided by the board, but also considering investors and regulatory sentiments. I know most of you are probably eager to hear a yes on this matter and maybe expecting me to provide exact timelines, but I think in compliance with the governance rules, I will not be able to share much details on the matter. Just rest assured, as I said, this is a very important agenda for the bank, and we will actually expedite looking into this matter. Being our shareholders, investors, and key stakeholders, you will be the first, to know in case of any developments on this particular agenda. I think the last agenda item that I wanted to provide updates is the cross-border strategy. Yeah, you have always asked us about the plans that we have to take the bank to other countries. I think first I want you to appreciate that cross-border expansion is part of our internationalization strategy. And under this strategy, you have all witnessed NMB being the first bank in Sub-Saharan Africa to list our Jasiri bond, to list our Jamii bonds in both Luxembourg and London Stock Exchange, which actually just shows that we are making good progress in this agenda. Regarding the regional expansion, what I can say is that we are actually now very clear on which markets we are going to expand to in Africa. We have already identified some special assets, and we are currently in discussions with the said assets. But we are also in very good stages of opening representative offices. We have already identified the destinations, and currently we are engaging the regulators, and so we are also in various regulatory engagement stages. So again, we will communicate once we have finalized this strategy or this process. So again, cross-border strategy is a very critical agenda for the bank. We are intentional and we are making good progress, as I have alluded to. I think having said that, please allow me to now welcome Juma Kimori, our Chief Financial Officer. Juma will
Ruth,
take you.
if you could just pause for a second,
Yeah.
maybe you can give us a bit of color on the objective of the 5 year before you leave us, the objective of the next 5 years for NMB Bank, and on its how you think about its capital adequacy, and whether the bank is how the bank manages that capital adequacy.
So I think Juma will actually provide you the exact numbers of our capital position, but what I can say is that we continue to maintain a very strong capital position. Our total capital is now over 23%. I think Juma will give you the exact numbers, but we are over 23%. We are very well above regulatory requirements, and therefore the buffer that we have, I believe, will be very critical for us as we plan for the next 5 years medium-term plan, but also will be very critical for our cross-border strategy that I have already talked about. So we are well capitalized, over 23%, highly and over and above the regulatory requirements.
Thank you very much. I think we will hear from Juma next.
Yeah. Okay, so please allow me to welcome Juma Kimori to take us through the presentation, and I think towards the end of the presentation, we should be able to answer any additional questions that you may have. Thank you very much, and Juma, over to you, please.
Thank you very much, Ruth, for such an insightful introduction. And I think you have covered most of the questions that probably our investor will be asking. Now, in terms of the presentation, the way we have structured it, we will cover the operating landscape. We'll also provide light in terms of NMB overview, but again, in terms of updating you in the progress that we have made on the execution of our strategy, which will also cover the sustainability agenda that we also shared with you previously in terms of the progress we have made. But again, we will also cover the financial performance. Now, before getting into the NMB specific matters, I would like to welcome Aziz Chacha, who is our treasurer, to take us through the operating environment. Aziz?
Yeah, thank you. I'll try to save time here. Not so much has changed since we last had a call, except perhaps developments in some global markets, especially in the US. Now, in Tanzania domestically, not much has changed. Inflation still very much within the target as put by the central bank. Private sector credit growth, I think we've seen a decline in that area, especially towards the end of last year. And that is pretty much, in line with the current monetary policy stance, tightening, which also resulted into what we saw towards the end of the year, which was quite, a sharp, appreciation of the local currency and liquidity tightness generally, in the banking sector. But yes, as in line with our strategy, we were still, net lenders, not just to clients, but also supporting, other financial institutions. Forex reserves, you'll note they're quite healthy, at 4.5 months of import cover. I think that's pretty strong, relative to, what we see in our peers around the region, and also compared to the SADC and ESC convergence benchmarks. GDP, again, even globally, it's forecasted that GDP will be doing better than last year, except, of course, with what we're seeing in the US policy that could potentially, have an impact on that. But for now, we're still quite positive with the future. You'll note also the current account deficit is doing very well. Obviously, we've seen slow imports, compared to the same period last year. But exports are doing quite well, especially helped by mining, tourism, and agri-commodities, whose prices somehow also, helped to, reduce the gap that we see. So I think on the dollar interest rates, I think you also note that most global economies, monetary policy stances, have been easing. So with that, we've seen a drop in interest rates, with more major, central banks. We still hope and expect that perhaps, with inflation, contained in most of these economies, there's room for rates to actually go down, not unless there's some drastic change on the US, policy. I think I'll probably end there for in terms of the operating landscape. I'll cover briefly a related slide, which is the next slide. If you could move, that's the barometer now in terms of the strong economic environment that you're talking about. So what does it mean for the sector? You'll clearly see that with total assets, up 15% year on year. The composition of that, loans and advances, grew at 14%. For the sector, certainly, higher than what you saw on the deposit side, which is a 13% year-on-year growth. NPL contained 3.17%, pretty much in line with, what the central bank would prefer to see, below 5%. You'll also see cost-to-income ratio, 47.8% for the sector. Again, pretty much in line with what the central bank, would wish to see. The total revenue of 6.3 trillion. PBT of 3 trillion, which is a 34% growth year on year. But also, if you look at the trend on the profitability side, on the 5-year, looking back at how the sector has done, it has done pretty, very, very strong. With the NMB profitability being at, number one in the market, doing very well within East Africa, and we'll come into those details later. 22%, market share on deposits. 23% on loans advances, and 22% on total assets. So I'll stop there. We may take questions later, but CFO, maybe you can proceed with the next slide. Thank you.
Thank you very much, Aziz. So I think given what Aziz has covered and what Madam CEO has covered as far as operating environment, that has also supported the growth that NMB specifically has recorded in 2024. Now, if you look at the NMB specific performance, you will notice that we continue to cement our market leadership in quite a number of areas, including market capitalization, where we are talking about 2.6 trillion market capitalization. Actually, on the profitability, as well as it has covered our market share, we continue to lead at 30% market share. But again, I think when you look at people in terms of diversification, gender diversification, well balanced, 48 for 52. But again, our total asset for the first time has touched 13.8 trillion, which is around 13% growth year on year. We'll cover much detail of that. You will also notice that we have been able to optimize our delivery channels, where branch network has touched around 240. If you look at there compared with 2023, where we are 231, I think one thing that we have done, apart from opening new branches, but we have also upgraded some of the cash collection centers to make them fully fledged branches. So some of the areas where we had existence through cash collection centers, we have upgraded those to become fully fledged branches. And that's why you see that we have moved from 231 to 240. We continue to drive agency banking across. I think the last time we shared with you our rural banking strategy, and when you look at the numbers, we closed the 2024 with around 50,000 agents across the country, and that was a significant increase. And we will continue to drive growth in that space, just to ensure that we reach many villages, as many as possible across the country. But I think we continue to optimize on the ATMs. The number of ATMs has remained stable year on year. But again, given the investment that we have made on technology over time, we now see that around 84% of accounts that we opened last year, around 1.6 million, were opened via digital channels. But again, given on the same investment in terms of the technology, we have been able, I think the statistics now is around 96% of transactions are taking place on the alternative channels. So overall, in a glance, you see that we have recorded solid performance as far as key metrics are concerned. We continue to optimize our delivery channels, well-balanced workforce. But again, we have continued to receive a number of awards as clearly articulated in this particular slide. I will cover more details in the next slide in terms of financial performance. Now, in terms of the next slide, this is just to share with you in terms of the growth that we recorded as far as market capitalization is concerned. So you see, you are the witness in terms of how our share prices have increased, and that positions the bank, as the second largest bank in the region, if you look at East Africa region, but also if you look at all listed companies across East Africa, NMB now ranks number 5 with a 2.6 trillion market capitalization. But again, as such, if you look at the companies listed in Tanzania, we rank number 2 after Tanzania Breweries. Now, that positions the NMB as, if you look at Sub-Saharan Africa, excluding South Africa, NMB now stands as 21st, or rather number 21 out of the 30 top companies across Sub-Saharan Africa. So I think it's a very solid share performance, and of course, Madam CEO has already covered in terms of what we're doing as far as our shares are concerned. I think the next slide is more of, I just want to cover in terms of providing update on the strategy. So CEO covered in terms of the progress we have made to execute our medium-term plan, which is ending this year. I think we have made good progress, and 2024, our strategic pillars remain the same. So you recall, we are winning proposition as one of those pillars: operational efficiency, innovate for the future. I think we continue to cement our position in terms of driving loyalty with mass. And this is, we have continued to leverage in terms of our strength in this particular area, and we continue to penetrate across the country, opening more accounts in that space. But again, building productivity of our branches, I think you are the witness in terms of the efficiency levels that we have been able to drive, whilst we continue to invest in technology, but that has resulted into optimization on the other side. I think the investment that we continue to make on credit risk management has resulted into the best, or rather improved quality of loan portfolio, as I will cover in the later slides. But again, given the investment that we have made on technology, but the growth that we have also recorded on wholesale banking is a sentiment that we are making right decision, and we are making right execution in terms of the initiatives that we have put as far as strategic trust are concerned. And in the next slides, I will also share with you in terms of how we have been able to drive our growth on SME and Agri, which are key segments for portfolio diversification. Now, this slide is more of just to shed more light in terms of the focus that we have had in terms of disciplined execution of the strategy, and clearly indicates that we are making good progress as we get to the end of our MTP 2025. Last year alone, we were able to open around 1.6 million accounts. And of course, investment that we made in technology, the Kikundi proposition, we launched that. But again, that has resulted into the drive in deposit mobilization across. And we have recorded a very solid growth in deposit, specifically for the retail portfolio, where our retail deposit grow year on year by around 20%, the first time ever. So that is clearly an indication that what we are doing on the retail side is yielding the best results that we expect. But again, I talked about our diversification strategy as far as portfolio is concerned. We have scaled up agri and SME, and we have recorded growth both for wholesale and retail banking of around 30%. Now, wholesale continued to do well. I think just one thing to highlight, if you remember, in 2023, we aggressively grew our wholesale book, and 2024 marginal growth of around 5%. I think it was a year that we also wanted to take stock, but also to moderate the growth. I think that has given us a momentum. We are so much geared towards accelerating the growth in that area as well, but cautiously. But again, if you look at what we've been able to drive as far as accelerating NFI, we'll cover more in detail, but our NFI, given the investment that we have made, increased number of customer accounts and investment in technology, we have been able to drive the diversification of our income, where NFI now stands at 35% of our total income. But again, I think we were able to leverage of some expertise within the team, and I will share more light in terms of how we have been able to drive our performance with respect to FX income. Just to shed more light again, in terms of innovate for the future, some key highlights there. Mkononi income has been a very solid performing line, and we were able to deliver 26% year on year, contributing so much into our NFI. But just to add on the same, we continue to make necessary changes as far as systems are concerned. So we have LMS, which is loan management system, to drive efficiency around lending, CRM, just to get opportunity to get more insight on our customers, MDM, but also just as we briefed you earlier, we're making good progress in terms of implementation of core banking systems. So we are in that project, and we expect that we should be able to finalize the change, or rather the project, this year in July. So we are making good progress in that space, and these are significant investments that we're making, and with a vision that this will result into making this bank more relevant, continue to be relevant, but most importantly, sustainable, and being able to sustain the growth momentum. Now, in terms of our sustainability agenda, with our key 4 strategic pillars, we have made good progress. And if you look at sustainable operations, we have a number of initiatives that we're running with within the organization. We have been able to rebase scope 1, scope 2, scope 3. But again, in terms of sustainable finance, we have also made good progress, and you are the witness. We issued sustainable bond last year. Climate risk, we have also done quite a lot of initiatives there, following even the Bank of Tanzania issuing a regulation with respect to climate-related risk. We have been able to integrate climate risk into our credit processes. But again, financial inclusion, I've already covered in terms of what we are driving as far as onboarding customers into the formal banking sector. And we hope that we are on right track in terms of executing these strategic priorities as far as sustainability agenda is concerned. So as such, we have also highlighted in the next slide, where you'll notice that there are certain awards that we received last year, just to demonstrate that our stakeholders, our international community also recognize what this bank is doing as far as sustainability is concerned. So we were awarded the best bank for ESG by Euromoney in 2024, best bank for ESG from the World Economic Magazine, but also Platinum Award of Sustainable Bond of the Year by IFC, and also even other, like East African Gender Mainstreaming Champion. We were awarded that last year as well. So these are all to cement NMB's position as a leader as far as sustainability and ESG agenda is concerned. I think just to update from the accounting perspective, we are also adopting IFRS S1 and IFRS S2 starting the financial year ended 31st of December 2024. Allow me now to provide more highlight in terms of the financial performance for the year ended 2024. I understand that we published these numbers, and you are all probably aware of the numbers, but I just want to talk about a few things in terms of what drives the performance that we see. I think when we look at the overall, we have recorded solid growth in terms of total asset, 13% year on year. Our loans and advances growing at 10%, deposit growing at 13%. So you will clearly notice that our loans and advances grew at a lower rate compared to growth in customer deposit, which is a good thing to see. As I said earlier, I think last year was a year for us to take stock of our growth. So when you compare with the previous years where we recorded around 20%, 18% growth, this time around moderate growth, but still solid and pretty much aligned with the growth of the sector, as Aziz alluded to earlier. If you look at the growth that we have recorded versus what the sector has recorded, pretty much aligned. The efficiency levels continue to be maintained, 38% cost to income ratio. I think when you look at the ratio that we have recorded, this is one of the best in East Africa. Actually, it is the best in East Africa and one of the best in country. I will cover more details in terms of the loan portfolio quality, but as far as profitability is concerned, 640 billion profit after tax. We have audit ongoing, and we will publish our audited numbers by end of March. But as far as the audit is concerned, so far what we know and what we recast, there will be no much changes downward. Probably you will expect upward after the audit. Now, the next slide is more of a detail of the balance sheet. And I think here, just to highlight that, Prof, you asked about the capital adequacy. We are standing at around 23.6% capital adequacy ratio. This is a very strong capital position that will continue to support our growth ambition, but also that gives us opportunity in terms of our expansion programs. I know this has also been a question from our investors, but just to assure you that the opportunities that we are looking at as far as expansion program is concerned, it's very important that we maintain our capital at that level at this point, because that will help us in terms of both regulatory compliance, but also in terms of our expansion programs. I think the quality of asset has also improved, 2.9 NPL, and I think what is also very important there to note, our NPL coverage ratio is around 93%. Of course, is a reduction from last year, but I think still is a very healthy position if you look at the coverage that we have as far as that is concerned. Loan and advance, loan to deposit ratio, 92%, of course, an indication that we are a liquidity challenge. And of course, when you look at the growth that we have recorded on assets and deposits, as I said earlier, we were able to drive higher growth on loans and advances on deposits compared to loans and advances. We understand liquidity challenges that the market is facing overall, and I think we have been able to manage very well so far in terms of moderating, but also to ensure that we optimize our balance sheet. That's why you see that our investment in government securities reduced by 1%, just to make sure that we optimize our balance sheet in terms of prioritizing where we invest, given the liquidity level that we have. But given what I covered earlier in terms of the outlook, we are very much optimistic that the initiatives that we put in place, including rural banking, enhancing and deepening penetration to the wholesale, will yield the best result and will be able to sustain the growth that we expect on the loans and advances. Should there be a need to borrow, we will, but I think for us, we are very much conscious about borrowing, and we only do when it is very, very necessary. And I will cover in the next slide in terms of the mix of our funding, where you will notice that 80% of our funding sources is from customer deposits. I think this slide is more of highlighting in terms of our asset mix, and of course, loans and advances is taking around 8.6. So I think we will continue to drive growth into the loans and advances, and I think when you look at specific portfolio or other segments, we have made an improvement, in terms of diversifying personal lending. If you recall, last year, end of 2023, we recorded, we were talking about around 62% personal loan. And if you look at the end of 2024, we are now talking about 59%. So this is clearly an indication that our diversification strategy works because we have been able to drive growth in other areas or other segments, including agri and MSME. So in a nutshell, this is the asset mix. Now, in terms of funding base, we have 85, as I said earlier, which is made up of customer deposit. And I think one thing that is very important and you will appreciate is that out of the 85% of the deposit, 85% of the deposit is CASA, which is a stable funding base and sticky. So I think our strategy in terms of driving customer deposits, specifically on CASA, remain relevant, and we'll continue to focus on such strategy going forward. Now, in terms of asset quality, I covered NPL, so 2.9%, but also portfolio at risk has also reduced. So now we're talking about 7.2 as at end of December, but the coverage has also remained stable. But I think one thing that we also need to note is that loan loss ratio has remained at a level of 0.97%, which is an unhealthy position as far as impairment charge is concerned, against our target of 2%. So I think we are making good progress in terms of improving our portfolio quality, implementing certain risk management, credit risk management measures. That has resulted into what you see. And I think overall, in terms of the operating environment, continues to also support what we are doing. If you recall, even the market now, I think NPL is around 4% thereabout. So that is an indication that we are trending very well in line with the macros and operating environment. The next slide is on the P&L. I covered in terms of the profit after tax that we have been able to record. And of course, that gives us ROE of 25%, which is a good return, to be honest, and efficiency levels very solid. Maybe I move into the next slide to unpack how we have done in terms of the specific income lines. And I will start with NII. This slide clearly illustrates, the growth that we have been able to record on NII. The reality is that there was pressure in terms of interest expenses, but we are able to contain that. When you look at our borrowings, remained almost the same level, dropping 1% year on year. But again, that has supported us in terms of cushioning interest expenses, and as such, 13% NII growing. I think one thing that also is important for you to note is that our NIMs have remained stable over time. And of course, we have been able hello?
I think we can hear you, Juma. Please proceed.
All right. Thank you. So we have been able to protect our NIMs. I think the key focus for us as a bank, given the macros, the liquidity position, the pressure on interest on lending, but also the pressure that we see as far as interest on deposits, We are very cautious about protecting our NIMs, and we will continue to do such in terms of optimizing our pricing so that we remain a solid performer as far as NIMs are concerned. Cost of fund remained at 2.8. Of course, it is an increase from 2.5% that we recorded end of 2023. But this is also in the back of liquidity challenges, and therefore we note that some of the corporate clients, institutions demanded higher interest rates. But of course, we all know what has been happening with the government papers. So I think the interest rate environment, as far as liability is concerned, that has resulted into driving our cost of fund from 2.5% to 2.8%. But still, this is below 3%. And what is important, as I said, is for us to continue to protect our NIMs. On the NFI side, very strong growth momentum, 23% year-on-year increase. And of course, contributing 35% on the total income. And of course, I think one thing that you will note on the NFI side, and solid performance on the FX income at around 51% year-on-year increase. And I think, this is, we all know what the economy, or rather the market, went through as far as FX is concerned. But we are able to leverage our expertise, but also convince our customers, and we saw customers coming for alternative currencies, like Euro, South African Rand, and so on. So that enabled us to navigate well and continue to support our customers, and that has resulted into the growth in income that we see. I talked about investment we have made in technology that has resulted into fees and commission growth of 20%. So that we have seen increase in the volume of transaction, we have seen increase in the number of accounts, and that has driven what we see as far as fees and commissions are concerned. 20% growth year-on-year is a very solid growth, and we will continue to drive growth of NFI just to ensure that we have stable and well-diversified income going forward. Now, in terms of efficiency, I think this is just to illustrate that whilst our costs have been increasing year-on-year, and of course, if you look at last year, our operating expenses increased 14% year-on-year, but still we remain efficient. So this is clearly an articulation of our prudent cost management, but also continuing to invest in what matters. So I think over time, we have not stopped or rather reduced spending. We are increasing cost, but we invest in what matters. So our people, and I will cover more in details, like just to give you a highlight in terms of the investment we've made on people. Last 4 years, our spend on staff was around 44%. In the last 5 years, now we are talking about 54%. So this clearly indicates that we have been able to invest in what matters. And people, for us, is key priority. We'll continue to invest in our people. We continue to invest in technology to drive the growth momentum that we have. Now, that investment that we continue to make, we have seen even people productivity has increased significantly year-on-year. So you are talking about TZS 209, end of 2019. We are now talking about 461. This is one of the best in the country, but also in the region. And as such, NMB has been accredited as top employer, in Tanzania. So I think all this that we do to our people, all that we do to technology, investing in right spaces, investing in the right avenues, will continue to provide more efficiency going forward, because it's not just saying that the cost is growing. We will continue to grow, investing in what matters. So I just want to highlight that 14% growth year-on-year is not a small number, but you look at the efficiency that we have continued to record over years. Now, I think the rest of the slides is more of just to highlight, to our investors and stakeholders in terms of our journey, our 10 years journey. And we have put these slides. So if you look at dividend per share now, you are talking about 104 in 2015. Now we are talking about 361. I think all these graphs, if you look at them, clearly indicates a very solid performance over time, very solid growth that we have recorded to our stakeholder, but also the impact that we have had to the community, to the economy. I think it is a massive contribution that we have had as an organization. And we will continue to ensure that we remain relevant, we remain a sustainable organization. We continue to create, or rather to have positive impact to the economy and to the community at large. I think what Madam CEO said, that we are at the stage where we are preparing another MTP 2030 agenda, and we will ensure that that MTP focusing on delivering the impact to our stakeholders, including our investors. So in a nutshell, that is what we wanted to share with you today, our investors, as far as our 2024 performance is concerned. I think this, I would not want to cover these details as far as 10 years journey is concerned. So with those remarks, Prof, let me hand over back to you, unless I've not covered something that my colleagues, Aziz and Innocent, want to cover before.
No.
All right, so Prof, back to you and to the audience for any comments, any question that you may have for us to address. Thank you.
Thank you very much, Juma, Aziz, Ruth. I think that was very comprehensively presented. First of all, let me just start off by saying and acknowledging the tremendously good results that NMB Bank has not only produced in the year 2024, but has been doing all the years. I think the performance of the bank speaks for itself. Nothing more can be added to it. I think we'll just open up for questions, and I'll start off with Muammar. Muammar, if you can unmute yourself. Muammar is from Africa Alliance Fund. Muhammad Karibu.
Hello. Hi, Prof. Can you hear me?
Yes. Please proceed.
Hi, thanks. First of all, congratulations on the fantastic results. So I just had a question on the the capital position. Just a clarification, I saw 27.2% on one slide and then 23.6% on another slide. I'm assuming the first one is your total CAR ratio and the second one is your tier 1 CAR ratio. Is that correct?
It's probably the typo. We are at 23.6% total capital. But given our capital mix, I think the difference between total and Taiwan is very small, as we don't have much of subordinated capital.
Okay, no, I'm actually looking at a screenshot I have here. It's quite a difference actually. So I mean, you're on your, I think on your second slide where you talk about, not your second slide, it must be on your performance of overview slide. There's a snippet there that says capital adequacy ratio 27.2%. So it's around almost a 3.5 percentage point difference, which is quite significant.
Let me just clarify. So
yeah,
I hope if you have seen 27, it's probably unaudited.
Okay.
So the audited normally will be lower. I mean, sorry. The audited normally is higher. Unaudited is on the lower side. But just can you cross-check those numbers? So one is probably audited and the other one is not audited.
Yeah, I'll check.
But just to confirm, I think the audited is. Let me just confirm. You can continue as we confirm.
I think in the meantime, Muammar, you can ask your other questions.
Yeah, sure. So I think Ruth touched on it before she left. She mentioned, I think, possible regional expansion. So my second question is actually related to the capital position. It's quite a healthy position, even if it's 23.6. So let's round that up to 24% against required minimum capital of around 15%. That gives you guys an 8 percentage point buffer. I understand that regional expansions require capital, but is there any chance of NMB maybe increasing its payout ratio from the traditional, a third of earnings to something a little bit higher in the interim? And specifically on the regional expansion, could you please elaborate on which specific markets you're looking at and the timelines for these acquisitions? Are you trying to build rep offices or focus on your rep office development in 2025 this year, and then maybe look at building fully fledged subsidiaries later down the road? Or are you looking at acquisitions in the short term? It would just be great to get a bit more color on what you plan to do with that capital, and maybe just a little more color on the regional expansion plans. Thanks.
Prof, can we respond now, or we
Yes,
collect all?
I think let me give you another question from Emmanuel Matunda, and you can respond in total. Emmanuel's one question was on the dip in the NPL coverage that was in the fourth quarter of 2024. I think the dip had come in from about 100 or slightly over to the 93% level. And the second question was on the element that how NMB is positioning itself for loan book expansion in environment of liquidity challenges and monetary policy, the tightening monetary policy stance.
Okay. So I think with regards to capital, so we are holding that capital buffer. You have talked about around 8%. And I think you will agree with me, as you have also said, expansion that requires regional expansion will require capital. It's not, huge, rather significant capital that will be required to be deployed in that. And I think at this moment, I think to be more prudent, because there is no need for us to say, okay, can we now increase dividend payout ratio, and then later on we come back to you, we request for capital. So I think it is more prudent to hold that capital buffer, given there is clarity in terms of the investment you want to make as far as regional expansion is concerned. Now, two things here. So one is regional expansion, which is East Africa, which is East Africa. And I would not probably mention the specific countries as we speak, but just to reassure you, as CEO said, we have already identified some candidates or other targets that we are talking with within East Africa. And that will require capital, obviously. So, as we progress, we will definitely come back to you as our investors and shed more light when things are firmed up. I think we are at an early stage, and you will agree with me that some of these decisions, some of these discussions need to be quite confidential in a way until the point when we firm up things. But I think just to assure you that we will do whatever the analysis and make the right decision, just to rebuild the right decision and take into consideration our investors' interest. Now, in terms of the market for rep office, definitely not East Africa. We are looking for markets in Asia. And we will start with rep office. And of course, we all know probably what rep office means. And then as we progress, given the opportunity that we'll see in those markets, no harm for us to open a branch or operate another business office, So I think we'll start with rep office in those areas, specifically in Asia, where we see trade flows. And then if in some years, then we will be able to convert those given the opportunity that will come at that point in time. Now, the dip in NPL, of course, NPL is a ratio, we all know. But I think, if you note that even our impairment number, ECL charge, has also remained very stable, 85 billion compared with the last year. So I think where we are now, the 93% is still a healthy in terms of coverage. As we speak, of course, that has increased to 96. I think our investors are asking just because you're used to more than 100, but I think the 93% is still a healthy position. We are well covered, and as we speak, we are talking about 96%. That has improved, and we expect it to improve going forward. We will remain prudent and to ensure that we are able to have adequate coverage to absorb any shock in the future. Now, in terms of how the bank is positioned to grow loans and advances under tight liquidity, of course, what we see in the market, appetite for credit continues to be there, and we are very keen to ensure that we grow our loan book while managing liquidity. I think if you look at what we have recorded in 2024, loans and advances grew at around 10%, while customer deposit grew by 13%. We understand there is pressure. We cannot stop lending as a bank, specifically for the impactful sectors, and and we will continue to source funding because I said earlier, one of the ways to do so is borrowing, but when it is only very necessary for us to do so. So I think for us, we have learned a lot all the way in terms of managing liquidity and continue to support lending momentum. So let me assure you that as far as liquidity management is concerned, we have robust mechanism to do so, and we'll continue to support the economy in terms of growing lending using various sources of funding.
Thank you, Juma.
Thank you.
I have no doubt about that since Aziz Chacha is sitting next to you. I know he's on top of that already. Thank you very much. Can I ask anyone else who has a question? If none, I can give the floor to Muammar to ask a follow-on question. Muammar Karim.
Thanks, Prof. Yeah, sorry. So just, is it possible to just clarify what your definition of East Africa is? Is it, does it include Ethiopia, for example? That's my first question. And then my second question is the thinking behind opening up a representative office in Asia. I remember back, I think it was in 2021, you acquired a local bank, a China commercial bank, because you wanted to improve trade ties with China in particular, and I think maybe the Southeast Asian region. Is that a decision taken as an evolution from that first acquisition, or is this something particular that you think a rep office would do that your current operation or your correspondent banking relationships is currently not doing? I'm just trying to understand the thinking behind the opening up of a rep office in Asia. Thanks.
Okay, so I will respond and then ask Aziz also to chip in. So thanks for your question. So I think you want us to clarify the definition of East Africa, and specifically you have cited Ethiopia. Yes, we consider Ethiopia is part of the East Africa and the other countries that you know. So DRC, Burundi, Rwanda, Kenya, Uganda, Ethiopia. So I think East Africa, there is clarity in terms of what it is. So Ethiopia is one of them. Now, the rep in Asia. So you will appreciate that Tanzania trade between Tanzania and Asia over time has grown, trade volume. So if you look at the importation from Asia, China specifically, if you look at the connection that we have, Tanzania, let's say UAE, India, and the rest of Asian countries where we trade a lot with, I think we see there is potential because we have quite a number of people flowing from Tanzania to those countries, from those countries to Tanzania, and I think we need to be relevant in those markets. We need to have presence in those markets and see how we can tap into the opportunity in those markets. You have also linked this to acquisition of China Commercial. I think China, if you recall, China Commercial Bank was under a regulatory management. So it was already in trouble. So I think that was, I can in a way say was just for us to support the regulator in terms of acquiring that asset. I think it is not linked to the rep office that we are talking about here. Aziz, is there anything you can?
Yeah, maybe I just can add a little bit. Obviously Asia will include China certainly, but there's Japan, there's South Korea, and we have a very good relationship with entities in those countries, in corresponding banking relationships with most of the top banks in those markets. And in any case, we also see some of them have representatives in Tanzania. So I think we've seen that, opportunities to work with these guys, there's immense wealth created by, working very closely with these entities. Some who have significant interest in Tanzania. So I think Asia, Middle East, certainly, we want to be on the ground, at least to pick some of these opportunities ahead of time. Thank you.
Thank you very much. I think I haven't seen any other questions coming in. So Juma, if I could ask you, what is the targets for 2025? What is your guidance on 2025 in terms of top line, bottom line, margins, NIMs, and the other targets and ROEs?
Prof, that's a tough one. I know you also model, so definitely you have your numbers. But overall, I think just to assure our investors that we remain very much focused on the execution of our strategy. And our strategy is very clear in terms of the areas we want to drive the business, in terms of the areas we want to grow, in terms of the efficiency levels that we want to drive. That remains, key focus for us. We know market dynamics this year, but I just want to say that if you look at our projection, we project very solid growth this year, both on balance sheet and P&L. But I think return on equity will definitely, if I may say, will not be eroded anyhow. So we will remain almost same levels that like what we recorded in 2024. And our efficiency levels will also remain very stable. And of course, we have started this year. Today is almost end of February. There is nothing much to worry about, nothing of concern that we are aware of as we speak, as far as operating environment is concerned. And the strategies we have put in place for this year, being the end of our MTP 2025, are very specific. And we believe that if we are able to execute those strategic initiatives as early as possible, of which we have started already, we are very sure that we're going to deliver very solid numbers, ceteris paribus. Thank you very much, Prof.
Thank you very much. I think that gives us a bit of clarity. Anna had a question on your agri-lending. How is NMB growing the agri-lending, and which segments of the agri do you lend to? Is it on the downstream, basically on the crop side, or on the trading side?
So on the agri side, I think we had a slide where we highlighted in terms of how we have been able to grow our agri portfolio. And I remember I said that our agri, specifically for retail banking, grew by around 30%. And also the wholesale banking grew by around 104%. Now, I just want to also shed more light that with that growth that we have recorded, the quality has also improved. Because as at end of 2024, NPL, for example, for agri portfolio was 7.5%. And the agri wholesale was around 7.9%. This is when you compare with the, let's say, 4 years back, where we are talking about double digits. So the portfolio quality has increased. Agri retail has grown by 30%. Wholesale agri has grown by 104%. Now, we finance across the value chain, from the farming, from the small farm holders. We also finance traders all the way. So we cover the value chain of agri. I think if you can appreciate as well, if you look at the agri sector in Tanzania, you'll find that some of the investors do from the farming to trading. So we finance the value chain, just to say in a nutshell, we finance the value chain of agri, both in retail, but also in the wholesale space as well. And quite different sectors, subsectors of agri. So coffee, tobacco, we do sugar, we do cotton, and some of the significant or cash crops that we have in the country, strategic crops that we have in the country. Thank you.
I think that is an exceptional performance by NMB to speak about not only growing the credit portfolio significantly, but at the same time actually improving the portfolio quality when you are having a wholesale growth of 104% and a retail growth of 30% in agricultural lending. This is the biggest sector in the country in terms of employment, single biggest in terms of impact on Tanzanians and their security. Obviously, agriculture is critical. And I think it's always been top priority in the national policies. And for NMB to play such a critical role, growing the agri portfolio and doing so not only profitably, but also with a better quality, I think that is credit to the bank. I think with that, we are almost coming to the end. I think Muammar has asked me to maybe have a last word. Muammar, karibu. Yeah.
Thanks, Prof. Yeah, so I just wanted to maybe just ask one question and then share a comment. The slowdown in whole, I know Prof has commented on your really significant and impressive growth in agri lending, but your wholesale banking portfolio, you said it was last year was a year to kind of consolidate and then reassess your position. Are there any sort of big ticket opportunities in the wholesale banking segment that you maybe passed over, or you felt maybe the loan to deposit ratio, because now it's at 92%, wouldn't be worth taking up because of your current balance sheet position? And then related to that, do you currently have any restrictions in your single obligor limit from taking up new big ticket loans in Tanzania's private sector? So those are just my two questions. Like, have you been passing over any wholesale banking opportunities, and do you have any single obligor limitations? And then just the last is a comment. So when we speak to at least Kenyan banks that are invested in Tanzania, Tanzania has been a huge focus for them, and things have really turned around. They really struggled over the last couple of years, but they all seem to be talking about increasing their capital allocation to Tanzania. And I just wanted to mention this because management is the NMB is in a very healthy capital position, and it would be nice, to see the bank actually commit some defensive capital while other foreign-based banks increase the capital input into the country. Otherwise, once again, congratulations, and thank you very much for the call. Thanks, bye.
Okay, thank you very much, Muammar, for the compliment. Just to reflect in terms of the two questions you posed. In terms of our wholesale growth, I said it was a year of taking stock, but also to look into the position that we have. I think given what we have in the market, and NMB over time has been able to build a relationship with very significant corporate clients. And as we speak, we have a very healthy pipeline that we will continue to support. So we normally look into those pipelines. And of course, we have also been able to support on the off-balance sheet side. But if you look at the pipeline that we have currently, I think it is time now for us to take on board some of these pipeline into our book. These are in the sectors of manufacturing, construction, and so on. So I think the pipeline is very healthy, and I think we'll see us growing in 2025 in wholesale space. I think we are very much conscious, as I said earlier, but I think we are looking at the best quality assets to bring on board. It's just not a matter of taking any asset that comes across. So we will continue to strengthen that pipeline, and what we have now, if we say, let's say we book all that we have, then you will see a very exponential growth. But we are managing in terms of what we book, and we continue to have conversations with our clients without impacting their operations and so on. So we have various ways to accommodate different requests that come from the wholesale and the corporate customers. So we believe in the relationship, and we will continue to support. So that's what I can say in terms of the growth in the wholesale space. I think in terms of the single obligor, given our capital position, total capital shareholders around 2.5 trillion, that makes NMB the largest in terms of single obligor. So we don't have such a limit, a limitation as far as single obligor is concerned. I think that in terms of absolute numbers, you are talking around about 500 billion, 600 billion TZ shillings, just a single borrower's limit. So that gives us a milestone in terms of the size of the deal we can book. But I think, we look into these deals where there's a need to syndicate and do so, we normally accommodate such situations just to ensure that we share the risk. Thank you.
Thank you very much, Juma and the entire team. Yeah, please, welcome.
I just wanted to add something.
No, just to add to what CFO said, I think we're not greedy. So, much as we want to, do all the big deals, but I think prudence, we will prefer, sharing the risk with others. So, but otherwise, there's no limitation whatsoever from a single legal perspective. Yeah. Thank you, Prof.
Actually, that is a very healthy attitude in a bank to ensure you are managing the risk. And I think NMB is quite well in that space of being sure that the risk is well managed. I think we've come to the end of all the questions. I would like to extend my thanks to the management of NMB PLC, to Ruth, Juma, to Aziz, to Innocent, and everyone else around the table. Thank you very much. And for all the investors who have joined us for this call. Juma?
Yes, so thank you very much, Prof. And thank you very much, investors. I think we really appreciate the conversation that we have had. We really appreciate your input in terms of advising us, in terms of putting the comments honestly. I think, we will continue to engage you. We also appreciate that we'll continue to engage. Prof, I think what Ruth pointed out in terms of the timing for this call, probably we need to look into how we can make it as early as possible once we have publications out. I think what Madam CEO has covered during the introductory session is very critical, and I hope our investors have taken on board those comments into consideration. So just to assure you that the bank remains stable, and we are geared towards accelerating growth, prudently. Thank you.
Thank you very much, everyone, and good evening.